Yeah, good evening, everyone. So, welcome to Accountancy Crash Course for Class 12 Commerce. Let's start the session with the curriculum. So, here you can see that the curriculum, there are part A, B, C, and C comes in the project work. A and B is there are two books by NCERT. Part A contains the book 1 and part B contains book 2. And part A that is for 60 mark and part B for 20 mark. And after that, there is a third option that is for computerized accounting that we are not following. So few schools and few state, they take computerized accounting. But for accountancy student, financial statement analysis is must. So we are following as per NCERT, the part B. There is an option part B or part C. Okay. So part B and the part B same. That is, sorry, financial statement analysis and computerized accounting. So anyone only. So in the question paper also there will be option. Then comes the practical work in the accountancy. That is project to file 12 mark. YY is for 8 mark. So now coming into part book 1. Book 1 is sorry, it was muted. So part A, there are total 60 mark and part B. Now see the question paper pattern. In part A, there will be 1 marker question. There will be 16 questions of 1 mark. Then comes in part A, 4 questions of 3 mark. That is total 12 mark. Then 4 marker question. There will be 2 questions. That is of 8 mark. Then 6 marker question. There will be 4 question. And out of that, 2 will be having internal option. And here also out of 4 marker, 1 question there will not be any internal option. And out of 3 marker question, there will be 1 question for internal option, without internal option. And MCQ, overall 5 questions there will be with the internal option. That is about the part A. So total comes 16 plus 20 plus 12 plus 8 plus 24, that is of 60 mark. Then coming into part B. Part B is again 1 mark question. That is a 4 question. Out of that, 1 question will be internal option. And 3 marker question, there is no internal option. And 4 marker question, there is 1 question only with the internal option. That is always from the comparative common size statement. And the last question is 6 marker question. That is only 1 question from cash flow statement analysis. So total is 20 mark. And 60 plus 20, that is 80 marks. I hope you are clear with the question paper format. So that's all about question paper pattern. Now again coming back to the today's topic. Before going to that, let me explain about the analysis of the question paper pattern. So how the question paper pattern? In the question paper, there will be 34 questions. And out of 34 questions, here I analyzed the sample paper of 2023-24. That is this year's. Sorry. That is first question you see. There is from admission of partner and the topic covered is goodwill. Then again, second question, fundamentals of partnership. That is from the profit and loss. That is an assertion reasoning question. So this way you can see the analysis on the screen. Again, third mark with internal choice, share capital or debenture, either from share capital chapter or from. And it is purely a theory question. This is a theory question. Again, change in PSR is another question. That is again from the chapter number 1. Fundamentals, again, treatment of interest on loan to partner. Here we will focus much into that because it is very easy to understand. This is the easiest, one of the easiest topic is interest on loan. Again, 6 marker question from the debenture, not from the share capital. That is purely theory part. Question number 7, accounting for share capital. Here you can see the analysis on the screen. So all questions chapter wise from which topic it is covered. If from each chapter which topic it is covered is done. So it's a crystal clear analysis of the sample question paper 2023-24. Now we had completed in the question number 16, we had completed all 1 marker question. Now more into the 3 marker question. 3 marker question, that is retiring partners loan account. 3 mark. Then another with the internal choice, past adjustment question. Third one is from the accounting for debentures or shares, that you all know that issue of shares for other than cash. Or it can be forfeiture and reissue of shares. That is from the share capital. But from the debenture, it is issue with the terms of redemption. There are 6 cases. So you should learn all the 3 cases. So here they asked 3 cases, all the 6 out of 6 cases, they asked 3 cases for 3 mark. Then there is a must question that is from goodwill. Every year it will be there. Maybe out of the 3 method, any one method in our sample paper, it is super profit method. Accounting for share capital, a must question without any internal option. That is preparation of balance sheet as per Schedule 3 of Company Act 2023. Dissolution of partnership form, purely journal entry for realization. So here the 2 questions of 4 mark is over. Then accounting for share capital with the internal choice. That may be always it will be with the forfeiture and reissue of shares. Then again 6 marker question from the admission of a partner and retirement. Either from admission, first question will be from admission and second will be from retirement, either from retirement or from death of a partner. So in our sample paper, it is retirement. So that is why question number 25 is death of the partner. Here you have to prepare deceased partner's capital account. So that is comparatively easy and very easy to score. You have to prepare only account with a maximum 6 item. 6 item. So almost all the item you can get 1 mark. Accounting for debentures, that is the journal entry for debentures, issue of debentures with the TDS and or with the terms of redemptions, redemptions. Question 27 say part B will be starting. There are 4 questions, MCQ question. Out of that 2 questions are having internal option. And out of these 2 questions are from the cash flow statement. 1 is from the 2 are from the accounting ratio. There comes third question, that is heading and subheading, major heading and subheading from the balance sheet. There comes the ratios. So here also the given ratios are very important. All these three ratios they ask. Beyond that they ask stock turnover ratio. Then they ask working capital turnover ratio. These are the 5-6 ratios which is very common. Then the third one is interest coverage ratio. And beyond that, these 3 given ratios are also important. Moving ahead, question number 33 is common size statement of profit and loss or comparative statement of profit and loss. Or else common size statement of balance sheet or else comparative statement. So these 4 compulsory you have to learn. Any 2 will come as internal option. Then the last one, that is cash flow statement. Preparation of cash flow statement with adjustment. So today my topic is cash flow statement with the adjustments. That is my topic for the day. Because comparatively, children, all the students, they feel much easy while they prepare cash flow statement. But during examination, you guys always make mistakes on that. So let's start with a little bit of theory. After that, we can start with the practicals directly. Very less theory. If you understand the theory part, it will take hardly 10 minutes for theory part, even to including your learning process. Now let's understand what is a cash flow. Whenever they ask the board examination, the question comes as state the meaning of cash flow statement. So definitely it is a statement showing the changes in the financial position of a business concern during the different intervals of time in terms of cash and cash equivalent. There are 2 methods for preparing cash flow statement. That is direct method and indirect method. Direct method and indirect method. As per CBSE, we follow indirect method of CFS preparation. CFS means cash flow statement. So this is prepared as per Accounting Standard 3. Here it is mentioned. As per Company Act, Revised Company Act 2013, Accounting Standard 3, all listed companies. So this is again our one more MCQ question. Which type of companies? Only listed companies. They have to compulsorily, it is a part of their financial statement. While we discuss about financial statement, you might be knowing that financial statement includes four elements. The first element is statement of profit and loss. Everybody might be knowing. Second is company balance sheet. Third one is notes to account. And the last one, that is fourth element, is our cash flow statement, which is prepared as per AS3 under indirect method. Now the common question for CBSE board exam, that is cash flow statement meaning. It is a statement that shows inflow or outflow of cash. So while you write the answer, this word should be there, inflow or outflow of cash and cash equivalent. This is the second keyword, cash and cash equivalent during a given period of time. As per Accounting Standard 3 revised, because Company Act is revised in 2013. The changes of this inflow and outflow of cash and cash equivalent should arise out of three types of activities. That is cash flow from operating activity, investing activity, financing activity. So while you answer, there should be three things in your answer, even for 1 mark. Number one, this is a statement showing inflow or outflow of cash and cash equivalent during a given period of time from the various activities. Which are the various activity? That is operating, investing, and financing activity. So these three things should cover your answer. Your answer should cover all these 3 points, okay? Now, moving ahead, cash flow means normally inflow and outflow. The inflow means receipts. All the income, whatever we get, whether it is cash receipt or out of this cash receipt means it can be revenue receipt or capital receipt, whatever may be. And outflow means all type of expenses, that means payment. So what comes in, that is inflow. What goes out, that is outflow. After that, meaning of cash. For MCQ, it is compulsory. Cash comprise of cash in hand, demand deposit with the bank. These are cash equivalent is a short-term, highly liquid investment. It is short-term and easily we can convert into cash. Highly liquid investment that are readily convertible into non-amount of cash which are subjected to insignificant risk of change in value. Its value will not be easily changing in the open market. If we discuss about a cash and cash equivalent, you all might be knowing that examples are, what are the examples of the cash equivalent? Current investment, investment for less than 1 year. But 1 year means for cash flow statement, it will be 3 months. It will be for 3 months maximum. Current investment can be. Then after that, the next one is e-rupee. It is also a part of the cash and cash. It is from the last year onwards, it is also a part of the cash equivalent. Then comes marketable securities. Marketable securities, you already prepared BST in the BST part 2. That is financial management. Financial management chapter. There is one concept. Marketable securities coming under financial market, not financial management. Financial market, there are 2 types of market, primary market and secondary market. Primary market consisting, what are the primary market consist? Primary market consists of capital market and money market. What is money market? Money market comes under marketable security. That is short-term investment. Investment for less than 1 year. And if we discuss more about money market, there comes commercial paper. Then after that, certificate of deposit. This is a part of the BST. So I'm just explaining for your knowledge only. Normally, money market means how we call it as? We call it as 4C plus 1T. What are 4 T's? Commercial paper, certificate of deposit. Then comes call money. After that, it comes commercial bill. Commercial bill. So there comes 4 C's. Commercial bill. Okay. Here it has more. commercial bill. Then after that, the plus one. Plus one is treasury bill. Plus 1T is there, that is treasury bill. So total how much? That is of 5. All these we can consider as cash equivalent. I hope you are clear with the cash. It has much important in the cash flow statement. And while we solve the problem, we are getting the word marketable security. Yeah, so we get current investment, or we get cash at the bank, or else we get cash in hand. Sometimes maybe e-rupee also we can expect. Objective of the cash flow, as usual, you know that it is purely for financial planning and for cash management, for framing the business policies, assisting the cash budget, and what are the various inflow or outflow from various activity like operating, investing, and financing. These are the common, like you people already learned the same in the class 11 cash book. The same only. Little bit, only the change is here. Framing of cash budget, formulation of business policy. That is not a part of the cash book. And the fifth one, operating, investing, and financing activity. After coming into the limitation, once we prepare the cash flow statement, then only you will be able to understand the limitations. So let's understand what are the various activities. First one is operating activity. Operating activities are the principal revenue producing activity. That means routine activity. That means from the sale purchase. Every day we sell the commodity, every day we purchase. So that is coming in the operating. Routine activities of a business firm is called as operating activity. So there can be inflow and outflow. Every day we can, here there may be two type of sales, cash sale and credit sale. But credit sale will not be considered because there is no inflow on the spot from the credit sale. So cash sale is a part of cash inflow. Then through credit sale, maybe receiving money from the debtor. So cash inflow is there. Cash received from commission and fee. While we purchase raw material on bulk, we are getting cash commission from, or if we are having a service sector, then fee is our income, major income. Royalty is another income. So whenever we sell the royalty, we are getting cash. So that is another inflow from the operating activity. Cash purchase, that is outflow payment. Payment to our third party creditors, suppliers, etc. Cash operating expense for routine activity daily for the operation. What are the expenses we pay? All the expenses what we incur for daily activity. Payment of wages to the worker. Income tax payment at the end of the year we have to pay. So all these are the outflows. Then whatever we discussed here, that is for a non-finance company. Non-finance company means manufacturing company, yeah, service sector company. It may be a goods or manufacturing goods or providing service. Now, if we take financing company, they won't manufacture anything. So financing company means what is? They might be dealing with the bank. There may be mutual funds. There may be shares, consultancy in shares, any type of consultancy firms which deal in financial activity. For them, if they receive any interest or any dividend, that will be considered as an operating activity. Interest received and dividend received. Because that is their regular income. For example, a bank will provide a loan. So what is their regular income? Interest they will receive. Now a share can, for example, they are dealing in the share broker business. Okay. So there what they are getting, they purchase the shares, they are getting the dividend. Now sale of security. Every day they sell the security. While they issue the security, we cannot consider. But they sell or purchase, they purchase shares, sell the shares. So both are coming. So whenever they sell the shares or securities, that is an inflow. They purchase the security, that is an outflow. Cash paid as interest is an outflow. But we cannot take a cash paid as a dividend. When we pay the dividend, we will pay the dividend once we issue the shares. So that is not the operating activity. Because while we issue the shares, then only we are making the payment of dividend. Issue of share is a part of the procurement of capital. To procure the capital, we are issuing the shares. So capital means it is the financing activity. So whenever dividend is paid by a financing company, that is considered as a financing activity. That is considered as a financing activity. I hope this much is clear. Now we are moving ahead. So operating activity, in cash flow statement, it is very much important that we should know whether the business is a non-financing company or financing company. Accordingly, we have to consider the item. As per CBSE, in the board examination, always we get non-financing company. Non-financing company till date. Till date, we were dealing with only non-financing company, not with the financing company. This we will be asking as a 3-marker question or MCQ question. That's all. Cash flow from investing activity. Now, as per AS3, Accounting Standard 3, investing activity means we have to take the balance sheet. Balance sheet may you are taking only non-current asset portion. While you deal about investing activity, you have to consider only non-current asset. What do you mean by non-current asset? That is fixed asset. Non-current asset includes fixed asset. Fixed asset includes what? Tangible and intangible asset. And non-current asset means non-current investment also it will be. What do you mean by non-current investment? Non-current investment means trading investment, not non-trading investment. If non-trading investment is given in the question, you will simply ignore that in the investing activity. You cannot consider that. Now coming into what are the various inflow and outflow from investing activity. First, let us discuss cash inflow. Sale of fixed asset. You purchased some assets. For example, you purchased a building and you sold it. While you sell, what comes? Cash comes in. Sale of investment. You purchase a company's share. Any company which is existing in the open market. So the companies, whatever the investment they sell, they are getting the cash. So cash is coming. There is inflow. Now, interest received. What do you mean by interest received? Here you can see that purchase of investment. What do you mean by purchase of investment? Purchase of investment means it can be a shares. You are investing in shares, mutual fund, or you are purchasing other companies' debenture, or you will be depositing an FD somewhere. Whenever we deposit FD, that is also an investment only. Outflow is we are giving money. Money is going out. So that is why it comes under cash flow. Whenever we invest an FD, fixed deposit somewhere, in return, what we will get? We get the interest. So interest received is an inflow, cash inflow from investing activity. It won't affect the daily operation of the company's activity. It is purely from the investing resource. The same way we invest in shares. In return, what we will get? We will get a dividend. Every year, we get the dividend. So that is also an income from investing activity. Now, here you can see that purchase of fixed asset. Suppose a businessman is having a sugarcane industry. He is doing a sugarcane. Otherwise, ours is the sugarcane manufacturing company. Okay. Yeah, sugar manufacturing, and we purchase raw materials, sugarcane, and we proceed with the manufacturing process of sugar. And here we are investing few in the fixed asset. That means we purchase a building. We purchase a building. And this building we are providing on rental basis. So what we get on that? On this building, we are getting rent. So that rent is an extra income that is not going to affect our manufacturing of the sugar. So that is purely from the investing activity. So whenever we invest or we purchase any fixed asset other than our main business activity, whatever the income we are getting from that, majorly these three are the income we are getting. Which are the interest received, dividend received, and rent received. These three. Now, purchase of fixed asset also there. That may be for manufacturing purpose. We will be purchasing. We are purchasing a fixed asset, a plant and machine for long term. So there again, outflow is there. So I hope you are clear with the inflow and outflow of investing activities. I hope there is no doubt. So we are discussing about the various activities of cash flow statement. Operating, while we discuss operating for theory part, there should be a well understanding about non-financing company, what are its income and what are its expenses. Then we are moving ahead with the investing activity. I hope this one also clear. And these last three items are the benefits we get from our investment. So it comes under investing activity, even though we are getting it routine. But we cannot consider this as an operating activity. Yes, definitely we will be showing it as a credit in the statement of profit and loss account. Our profit will increase, but it is a non-operating income because it is not going to affect the operating activity. Now, next one is financing activity. While we discuss the financing activity, here it is the composition of the owner's capital. That means preference share and equity share and borrowings. Because we know that capital employed. What do you mean by capital employed? Capital employed means total investment in the business. That means owner's fund plus borrowed fund. Owner's fund means खुद का पैसे. Borrowed fund means उधारी का. So we have to take, while we add both, that is called capital employed. So whenever we discuss about a financing activity, while you solve financing activity portion in cash flow, you have to take care of the shareholders fund. You will going through only shareholders fund, number one. Then the second portion you will have to take care of non-current liability. Non-current liability, because non-current liability may you can see borrowed fund and shareholders fund may you can see owners fund. These two items or these two heading only you will consider for financing activity. And for investing activity, you are considering non-current asset. And for the operating activity, whatever is left, that means current asset, you will have to consider current liability, you have to consider. Then after that, you will be considering the profit portion also. These three you have to consider. So total balance sheet, you will be easily able to understand from the balance sheet which portion is coming in the financing activity and which is coming in the investing activity and which is coming in the operating activity. Now let's discuss about the financing activity. While we discuss about financing activity, there is cash inflow and cash outflow again. What do you mean by cash inflow? That means the money comes in. While we issue the shares, in the beginning, we have to procure the capital. While we procure capital, that means we have to issue the shares. Shares can be preference shares or equity shares. Money comes in. So there comes cash inflow. Next one, issue of debentures in cash. We started the business now due to some modernization, diversification, expansion of the business, etc. We need money. That time we can issue the debentures. So while we issue the debentures, there comes money. Money inflow is there, cash inflow is there. Proceeds from long-term borrowing, long-term loan from the bank, security premium received. Sometimes the share price may be 10 rupee. But due to our good performance or high reputation, good marketing condition, growth of the company, etc., etc., due to that, our shares we can issue at a price higher than face value. That is +2. So total price may be 12 rupee. So this excess money beyond face value is called as premium. This is called shares are issued at a premium. So this premium, this 2 rupee goes to security premium. When shares are issued in the beginning, more than the face value, that whatever may be the excess value, that will go to security premium. So security premium received. That is always coming while shares are issued at a price above the face value. One time it comes, so definitely it is a capital income and it will be showing under the shareholders fund, right? So it's an inflow here. Increase in balance of bank overdraft or cash credit account. What do you mean by bank overdraft? Excess, whatever, every business can withdraw excess, whatever is in their credit account, credit. Excess of credit if the business firm withdraw, that is called as bank overdraft. So bank overdraft increase means money comes in. That is cash inflow. We are taking loan. हम loan लिया है बैंक में से for a shorter period. Every current account holder is getting, every company is having current account only. So they'll get the benefit of cash bank overdraft. That is a cash inflow. The same way cash credit, pure cash loan. That's all. For less than 1 year. So these are the various items of cash inflow we discuss majorly while we prepare cash flow statement. Now coming into cash outflow, payment of loan, repayment of loan. We have taken the loan. Now we have to repay the loan. So the money goes out. Outflow of cash. Redemption of preference shares or debentures. Debentures, preference shares, all these are for a stipulated time period. After the time period, we have to repay. So that is known as redemption. So this redemption is purely outflow. Buyback of equity shares. We want to our own company shares from the open market. We have to make the payment. Payment of dividend. While we issue the shares, after completing 1 year, from our profit, we have to give dividend. That payment of dividend is always an outflow. Dividend can be of two types. That is interim dividend. Yes. Now, because of this cash flow, I have to discuss this. This is very important from the viewpoint of cash flow. That is, dividend is of two types. That is mainly proposed dividend and interim dividend. What is interim dividend? In completion of term, in between the completion of term, that is from the name only it is interim dividend. That will be because a company is making super profit beyond the expected profit. So they want complete to wait 1 year. Before completion of the one financial year only, they distribute the dividend to its shareholders. That is called as interim dividend. Now, what do you mean by proposed dividend? That will not be given during the current year. The company is proposing this dividend to the shareholders. That will be announced or declared only at the end of the financial year. Then the payment will be in the next financial year. So every current year, they will be making the payment of proposed dividend of previous year. So for us, while we calculate, we have to consider only previous year. If in the question current year proposed dividend is given, we have to completely ignore. We have to ignore that proposed dividend for current year. It will be given in the question to confuse you. So you will simply ignore the proposed dividend for current year. Suppose the previous year is 2021-22 and the current year is 2022-23. The proposed dividend given for the year 22-23 will be ignored. You will not consider anywhere. It will be shown always after the notes to account as a footnote under contingency reserve in the balance sheet. After notes to account. Notes to account as a footnote, it will be shown. Right? So I hope payment of dividend is also clear to you. Now, payment of interest. When we take the loan, you can connect it from the outflow and inflow. When we take loan, there is the third item, proceeds from long-term borrowings. Definitely, we have to make the payment of loan interest. So that is an outflow. Regularly, we have to pay. This is a non-operating expense, whether your business will operate or not. Once you take the loan, you have to regularly pay the interest. Premium paid on redemption of preference shares and debentures. What do you mean by that? We are issuing the debentures for ₹100. Market में हमने debenture को sale कर दिया ₹100 में. There is a stipulated time limit for issuing the debenture or preference shares, whatever may be. Suppose we are issuing debentures for 5 years. After 5 years, we have to redeem these preference shares to the debenture to the debenture holders or preference share to the preference shareholders. In my example, it is their face value. Face value is ₹100. That means we are issuing. लोगों ने हमारा डिबेंचर या प्रेफरेंस शेयर्स दे परचेज्ड फॉर ₹100. ₹100 में खरीदा है. And after 5 years, while company return, while company redeem, while company repay this amount, this ₹100, company will be redeeming with a premium of ₹10. That means company will pay total 110. Because now company is in need of fund. So company want to motivate the public. So public will also think, yes, after 5 years, all the 5 years, they will get the interest also. And at the end of the 5th year, they are getting ₹10 extra. That is called as premium. And this premium will be given at the time of redemption. That is called as premium paid on redemption of preference share or debenture. And it is a capital loss to the company. That is an outflow also. Because company will pay after 5 years. Whenever company pay this, that time it will be considered as an outflow. Or the payment, all type of payment are always outflow. Next one is decrease in the balance of bank overdraft or cash credit. Last year, our bank overdraft balance was in the beginning. In the beginning, the bank overdraft balance was 25,000, right? And end mate is only 20,000. So there is a reduction. Reduction means we paid our bank overdraft. We paid our short-term loan, that is cash credit. So there is an outflow of ₹5,000. That is also to be considered in the bank overdraft. This bank overdraft, I think 3 years back, till that it was considered as current liability. But by last 3 years, it is considered as a financing activity. Because current liability means it will be coming under operating activity. But now purely this is a financing activity. No? I hope this much you all are clear. The cash flow from operating activity, investing activity, and financing activity. Now, directly we can go as per the board pattern, the long question. From this chapter, there will be total 8-mark question. 8-mark question means 6-mark question, that is long question, 1 question of 6 marker. Then comes 2 question of 1 marker. But in this 2 question, 1 question will be having internal option. So total 3 questions will be there. You have to answer. Suppose question number 27 onwards, part B will start. Question number 27, definitely cash flow. There will be an internal option, or. Then comes question number 29. 28 will be from the major heading or subheading or from the accounting nature. And this question number 29, no option. So there will be 8 marker question, but asking for 9 mark. So it is compulsory, you should understand. Again, coming into the interest and dividend, whatever I explained on the under the heading operating, investing, and financing activity. Let's again discuss this. This is something very important, and every year there will be 1 or 2 questions from this. 1 question will be in the MCQ and 1 question as a part of the subsidiary question in the 6 marker question. 1 will be there. Mostly that is interest on debenture, right? Now let's continue with the same treatment of interest and dividend. There are 2 types of enterprise. Already I discussed financial enterprise and non-financial enterprise, or that is why it is mentioned other enterprise. What do you mean by financial enterprise? That is dealing with the cash only. Bank, all share consultancies, then financial consultancies, mutual funds, LIC, all these are coming under financial enterprises. Other enterprises means manufacturing and service sector, right? I hope you are clear with the meaning of that. Now, cash flows. First, let us discuss financial enterprise. They deal only in the money. They only giving us a loan and taking us an interest. Accept the deposit and lend the money, in short. Okay. So cash flow arising from. What are their major income? Let us understand. Their income is interest paid and received. उनको interest मिलेगा और interest देगा. Dividend received. उनको dividend मिलेगा और dividend देगा. But you see that interest paid means they accept the deposit, they have to pay interest. जब किसी का डिपॉजिट देगा तो उनको इंटरेस्ट देना पड़ेंगे. सो फाइनेंसिंग कंपनी के लिए डेली एक्टिविटी है. सो दैट इज देयर ऑपरेटिंग एक्टिविटी. Interest received at the same way they lent the money, that time they have to get they will be receiving the interest. That is their regular income. So interest paid and interest received, that is their regular operating income for a financial enterprise. The next one is dividend received. Suppose a company which is dealing in the stock या share में deal कर रहे हैं. For them, they purchase the shares and they sell the shares. They purchase the shares, they sell the. Whenever they purchase the shares, they are getting dividend also. So every day they purchase. So at the end of the year, particular time slot, they get the dividend also. That is their regular operating income. So all these 3, that means interest paid, interest received, dividend received. These 3 are the operating income of a financial enterprise. Next, dividend paid. Dividend paid, we call it as an exceptional case. What do you mean by exceptional case? Whether it is a financial company or it is a non-financial company, dividend paid will be always considered as a dividend paid will be always considered as a financing company, considered as a financing activity. Dividend paid is whether it is financing or non-financing. It will come under financing activity. There are 3 activities in the cash flow, that is operating, investing, and financing. But in case of a financial enterprise, interest paid, interest received, then dividend received. All these 3 will come under operating activity. That is a part of the routine. But a dividend paid is an exceptional item for both financing and non-financing company. For both, it will be a financing activity because we to start a business, we need shares. Then we issue the shares and we procure the capital. Thus, we start the business. So while we issue the shares, every company has to pay dividend to the shareholders, whether it is a financing business or non-financing. So you can also see here, the dividend paid is financing. Dividend paid is financing. Both the case. I hope this is clear to the financial. Next one is other enterprise or non-financing enterprise. Cash flow arising from where they get the money. So in case of a non-financing means you can assume any type of business. It is manufacturing sugar, tire, anything, garments, chemicals, whatever it is, all FMCG goods, whatever it is. Fast moving consumer goods, anything comes. So all this will be coming under or any type of service providing industry. Okay. There, so but except banking service. Banking is a financial enterprise. Interest paid, that is a financial activity because suppose a chemical manufacturing company, they will take the loan to procure the capital only. They will not take loan for any other purpose. They are taking only for the expansion, yeah, to development means expansion only, yeah, modernization, whatever may be. So that time they will be taking loan. On the loan, they have to pay interest. Loan is a part of the non-current liability. So non-current liability is a part of the capital employed. So capital के ऊपर interest pay करेगा तो it is a financing activity. Dividend paid already we discussed. Then next one is interest received and dividend received by a non-financing company. Already I explained that in the investing activity. Interest received, you can see that. Dividend received by a non-financing company. Because their business is a chemical manufacturing, sugar manufacturing, jo bhi ho jao. They are having some fixed deposit somewhere. So they are getting interest. They purchased some other company shares. That is their investment. On the investment, they are getting interest received and dividend received. So that will be showing under investing activity. In short, while we take these four items means dividend paid and dividend received, interest paid and interest received. If we take in case of a financial enterprise, एक financial enterprise के अंदर हम इसको लेगा तो the three item that means interest paid, interest received, dividend received, ये तीनों operating है. Only dividend paid is an exceptional or financing में. But once we are coming into the non-financing, that means other enterprise, then dividend paid and all the payment, whether it is dividend paid or interest paid, ये दोनों financing activity है. All the receipt, interest or dividend received, ये दोनों investing है. I hope this is clear to you. For a enterprise, financial enterprise, all these four never will come under investing activity because they never will invest in others' business. They will utilize their money to invest in their own. That is the basic reason. So here we completed the theory part. This much only theory. But there should be a well understanding about the theory part. Until and unless you want to understand about the theory part, you will be struggling to understand about the practical session also. I hope this is clear to you. So again, let's recapitulate. We started the session with the marking scheme. Marking scheme is the framing of this sample question paper. Before that, we discussed about the question paper pattern. Question paper pattern, that is 1 mark question, 16 questions in the part A, 3 marker, 4 marker. The major is 1, 3, 4, 6. In BST also the same only, 1, 3, 4, 6. Accountancy also same only. But in accountancy, there is part A and part B. Part A covers 60 mark. Part B covers 20 mark. So this 20 mark means there are only 2 chapters. That is analysis of financial statement. Here comes balance sheet. That is major heading and subheading. Then comes accounting ratio. This is very easy. That means altogether this will be covering 12 mark. Then comes cash flow statement. Cash flow statement means here one more will come comparative and that is analysis of financial statement as a part of the balance sheet. Then cash flow statement is covering 8 mark. So 12 plus 8, 20. So here it is major heading, subheading you have to learn. Accounting ratio you will be learning. Then comes comparative and common size statement for 4 mark. Accounting ratio 3 mark. 4 plus 3, 7. 7 plus 3, this is balance sheet, major heading and subheading, 3 mark. Then MCQ 2 mark. That is why it is 12 mark. So there should be a well-structured idea. Always, whenever you take a book, any material, you should visualize the structure of the question paper, how it will be. And even you should know that this portion will be, what will be the question number of this portion? For example, cash flow statement, always question number 34. Question number 27, 29, 34 will be cash flow only. That way you should know. Then easy to learn. That's all. Then moving ahead, that is accounting firm, partnership firm and company. Company means here share capital and debenture. Both there is a 24 mark question. Out of 24, 6 marker question from the share capital, 6 mark from share capital, then 3 mark from share capital, then 4 mark from share capital. 4 mark balance sheet, 3 mark issue of shares other than cash, then 6 marker. 6 marker question is from the forfeiture and reissue of shares. So again, then after that, 2 more question, that is MCQ. One question will be assertion and reasoning and another will be a theory question. It including internal, there can be 3. Sometimes it will be 3 MCQ also because total 24. So here if I take 3, then it comes automatically, see that you can also see 16. Then the remaining rest of the questions are from debenture chapter. Debenture chapter, 1 question is 4 marker question. Then after that, 3 MCQ. That's all. Then comes the partnership firm. There it is a very big or a long topic, that is 36. Fundamentals of partnership, then admission, retirement, death, dissolution. So there comes 6 marker 2 question, that may be from the death, retirement, or the admission, death, or the admission, retirement, or admission, retirement and dissolution, like that combination. But admission will be always there. Death will be there. Compulsory it will be there. There also, after the 6 marker 2 question, then again 3 questions from 3 marker and 1 question from 4 marker and the rest from 1 marker question. That's all for about the structure. Then we discussed about the SQP analysis, sample question paper analysis. Here all the question wise I have analyzed. So you can also give priority to the topic, which topic you need to prepare for 1 mark and which topic you have to give more intensely, you have to prepare for 6 mark. So here you can see that question number 24, if I take admission of a partner, retirement. From both they asked, admission may say, this is called internal option. They asked for preparation of partners, capital account and balance sheet. There is no revaluation account. Revaluation account you will not prepare because revaluation gain is given in the question. That is the reason. Sometimes it will be revaluation account plus, last year in the board examination, it was revaluation account plus partners, capital account, that was. So it is whatever may be. And if it is a very small question, very less adjustment, then there can be balance sheet also. So if the bifurcation may be 2, 2, yeah, so it can be 2 mark, this will be 1.5 mark, and balance sheet can be 2.5 mark, like that the bifurcation can be. But hopefully majority, they will be asking either revaluation partners capital, one option, or another option partners capital plus balance sheet. This can be the combination. Because 6 marker may to ask all the 3, that will be long time consuming. Then again, we are into the, because there are 4 questions. Then you can see question number 23, already we discussed with internal choice from the forfeiture and reissue. That is a permanent question, always with internal choice. Here you see admission and retirement they covered. So what they have done, death they asked 6 mark and dissolution they asked for 4 mark. So death means this is very easy. Easy means the easiest. Only 6 item you have to endure for 6 mark. Almost each item you will get 1 mark. Hardly if there is goodwill वगैरह है तो आधे mark का bifurcation होगा. Okay. Then comes accounting for debenture. Here it is interest on debenture, debenture issue of the debenture ka shares, interest on debenture. Then how to write off the interest on debenture. It's very easy. And somewhere it will be issue of the debenture with redemption cases. All 6 cases may say 6 marker ke liye any 3 case they can ask because each case carries 2 journal entry. So 1.5 mark that way it can be, but 2 mark. So they will be asking 3 questions of 2 mark each. That is 6 mark only. 3 cases. 3 question means 3 cases. That's all. So this way I have done the bifurcation we discussed for the 23, 6 marker all we discussed. So hopefully I hope that you are clear with the sample question paper pattern also. Then we have discussed about the meaning of the cash flow statement, the keywords to be, what are the inflow and outflow, cash and cash equivalent, all the 3 activities should be there. Then the meaning of cash and cash equivalent. And there I discussed about the marketable security also. Objective of cash flow statement. All the objective you should know because this objective they will be giving us an MCQ also. So you should know this short-term financial planning also important. That was there in the CBSE sample paper last year. After that, all the operating activity, finance, investing, financing, its various cash inflow and cash outflow. That discussion done. Now tomorrow we'll be starting the new session with the practical session. Bye-bye. Take care.